Hey everyone, this is Kirk here again from Option Alpha, where we show you how to make smart trades. In tonight's video update, I want to go through all the closing trades that we had on Thursday, November 8th. So just as a reminder, if we do have just one quick closing trade, we won't do a whole video update for that. We're going to roll that one closing trade that we had yesterday, Wednesday, into tonight's video update. So we've been actually pretty active in managing and closing out positions, as we should be as we get closer to expiration. And we really haven't done too much of order entry just yet because everything honestly is going very well. Like a lot of our positions are doing well. We're well positioned for the move that the market's had. And so what we're starting to see with volatility contracting and time getting closer to November expiration is things are just frankly coming into play for us. And so we're just kind of sitting here and being patient and letting things come to us. So today was a little bit more of that as well. We closed out of a lot of positions, both today, Thursday, and also Wednesday, November 7th as well. So let's go through the list of trades that we have closed out of. And again, I do this a lot because I want you guys to see how we go about positions. I mean, that's the whole idea behind Option Alpha, is to kind of show you guys what we're doing in the back end with our real trades. And I think, again, what we learned this month, more so than the month previous and the previous month before that, is how important patience is when making all these trades. And you go and you look at a lot of the market, particularly a lot of stocks that have been moving and been moving pretty volatile over the last 30 to 60 days. And you just have to understand that patience really pays. It really pays to be more patient than to be overly emotional with trading. So first one up is the Wednesday's VIX position. This is also paired because we just happened to close it on Thursday as well. Early in the morning, we had two positions in VXX. The first one that we got into was actually the lower strike position. This was the one that we closed out of today, the 35.40 call spread. Then when VXX moved higher, we got into the 38.43 call spread. In both cases, we closed these for profits. The lower call spread, we closed for $201 profit. The higher one for $291 profit. In both of these cases, it was just a matter of time before VXX moved lower. That's why we do like trading VXX, because it has this like negative drag. And so if you can be patient enough to hold through these spikes in volatility, you end up making some pretty good money. And so we've traded it a number of times before in the past during these, kind of U-shaped volatility moves. And this one's taking a little bit longer to come back around. But it ultimately ended up paying out pretty nice dividends for this trade. We also closed out of our XHB straddle. This is the one that was centered at 35. This one took a little bit of time to come back around as well with everything else. But we closed just the inside short strikes, and the outside strikes are going to leave on to expire worthless. As you'll see with pretty much everything we closed today, we closed the inside short strikes. The outside legs are just not worth anything and not worth paying commissions to close. So again, this is a 35 straddle. When we got into this position, when XBI was moving lower, we got into it around here. It immediately continued to move lower against us towards around 32. Just took a little bit of cyclicality, a little bit of patience to see it come back up and hit inside of our profit window. And we had an opportunity to, again, take money off the table here. So for XBI, again, what we're trying to do here with these outside wings is just leave them on to expire. So the 30 strikes are worth maybe $1 if you can get it to fill. Same thing with the 38 strikes. You notice these are the ones that we left on to expire worthless. Those are worth maybe 50 cents, again, if you can get it to fill. It's just not worth enough to pay for commissions, and it probably is going to take a little bit longer to fill those. So no matter what account you have, you can close the inside strikes, leave these outside wings on to expire worthless. We also did the same thing with IYR. So this was our IYR center position at 80. This one was a nice big profit at $357. So good position for IYR. With IYR, again, like what we're seeing with a lot of stuff, and it's important that we see this time and time again. This position that we got around 80, we entered into literally, I think, on the first move lower. One of these days here, we entered into this position in IYR around 80. And again, it pretty much spent the majority of the last 2 months working against us and being underwater. And so it just took a little bit of time for it to come back around. And again, when you could just zoom out and look at a lot of these stock charts, what you notice is that nothing moves in a one direction fashion. We have a move lower, and then we have a correction, then we have maybe a move higher and a move lower, right? I mean, it happens all the time. It's this zigzag that we know is going to be in play all the time in the market. And so you just have to be patient enough to let it work out in your favor and just let the probabilities do what they're supposed to do. XLB, this is the second position that we closed in XLB. We closed the other one earlier this week. This was the 56 centered iron butterfly. Again, just removing the inside short strikes for a $330 profit. Nothing that really there too groundbreaking or earth shattering. And then later in the day, we closed out of our EEM inside short strikes of our 40 centered straddle. Again, nice $76 profit, buying that back at 123. EEM again was another one that just took a little bit of time for it to come back around before it actually ended up becoming profitable. So we had these short strikes around the 40 level, and you can see from the charts here that it actually spent some time moving lower before moving higher. I don't know why Thinkorswim's freezing, but it is. But spent some time moving lower before it came back up to our profit range and target. So again, it just took a little bit of time for that to come back around. So hopefully it helps out. I think we should be hopefully should be more active this week once the markets kind of move a little bit for entering new positions for December. Starting to continue to fill out that portfolio and slowly adjusting our beta in our portfolio to make sure we continue to stay neutral or keep getting back to neutral. I still expect a lot of volatility from here. I think you should expect a lot of volatility from here as well. So I don't think we've seen the end of volatility in the markets. I think we could have, some pretty good up and down days and some intraday moves that are pretty wild still to come. So just be prepared for it. Take your time. Be patient with everything. Don't be overly emotional with what happens in the market. You'll do fine as long as you keep position size in check. As always, if you guys have any questions, let me know. And until next time, happy trading.